Alright, quick update on waves. So this level that we're at right now needs to hold. Let's talk about it. First of all, we've got this target, this 786 fib. I've talked about this in my past couple of videos. You can see that this 786 Fibonacci is right here at $20.35. We are literally touching it right now. In the higher time frames, momentum indicators are calling for a bottom to be near, and that is probably foreseen because I mean you can see we've only really had a face tear to the downside like this one time for waves, and to be completely honest, you can see how long it took for it to actually regain momentum over here. So you can see the last time we had a huge face tear like this to the downside, the squeeze mom actually fired that the bears were losing control approximately here on the 31st of May. And you can see it fired that price target at $13. We had a fake out up to $19, so a pretty decent rally. And then we came back down and actually came down to as low as $11.70 while putting in this kind of like lower low, lower high formation over on the time frame. Now, if we come over to what's going on right now, it is very similar. You can see we've had this huge tear after making a new all-time high. We've come down and we fired a short on the daily EMA ribbon. So unfortunately, in my opinion, we've had such a fall from grace on waves that I don't necessarily think that we can recover this in the next couple of weeks or so. I think this is really going to be like a long-term trying to hold on to the 786 and trying to make sure that this level actually holds, because if you didn't know, Waves has been through a lot of drama. Their USDN stablecoin basically dropped to 68 cent. Obviously this is a stablecoin supposedly pegged to $1. It still hasn't fully returned to $1. Previously it used to hover around basically exactly $1, and the lows were like 99.18, and as you can see we're not even near 99 cent right now. So you know, this is really nitpicking things, but the USDN still has not returned to its former glory. It's still kind of just holding in there, so that is something to keep in mind. If we come over to waves, like I said, I mean I don't need to overcomplicate the analysis and draw 1,000,001 microfibs. In the short time frame, I wouldn't even run like a 618 retest on this, because this would put us below your macro 786 Fibonacci, and there's been enough time to try and bottom at this region already. So in my opinion, these lows down here at the 786 Fibonacci need to hold. You can see, you know, after we kind of take out these lows over here at $18.67, we have absolutely nothing to hold us down until we get thrown back to the start of this uptrend on the first local high that we put in at $13.60. So like I said, the higher time frame indicators like the squeeze mom are saying that the momentum in the favor of the bears is starting to subside and bulls should be soon to step in. But I would like to highlight the last time we had a situation exactly play out like this: all-time high face dive, all-time high face dive. You can see we had a dead cat bounce, the EMA ribbons fired short, dead cat bounce, EMA ribbons fired short, and then we saw the squeeze bomb turn dark green. It lasted a couple of weeks or so. I mean, if we extrapolate this from once it turned dark green, we really didn't get like exceptionally bullish for another 71 days. So I'm still expecting a little bit of turbulence for waves. I don't expect for us to just blast out of here and start making new all-time highs doing something like this, which I'm sure a lot of investors are getting ready for. I personally don't see that happening. What I see happening is maybe a retest of the short-term moving average, pump maybe up to $25, but I do expect chop around this region. I mean, we could even take out the lows and then later on in the month, you know, come back to them, because, you know, technically speaking, we do also have a somewhat very thin area of support down here at $17. But it's not good, because if we start taking out $20, then, you know, we've got to assume 17's on the table. If we take out 17, then 13.5's on the table. And then from there, you know, you could see that's a 18% drop and a 33% drop respectively. After that, we have absolutely nothing apart from the lows down here, and that's a 58% drop. Like I said, I don't think we're going to go down that low. I highlighted for many reasons why this scenario looks exactly like this one, and the last time this happened, this took 72 days to play out and make a bottom. I think we're at least going to have a few more weeks of chop pattern on waves. I could be wrong. Bitcoin is having a slight correction and a bounce right now. Let's see how this works out for waves. Let me know what you think below. But yeah, I think we're going to have some chop coming in. I don't think we're going to be out of this pattern until the end of April at least. I think we've got another chop for another week or two. That is all I really see for waves in the short term. Not looking too good. Lower time frames not looking too good either with this rejection on the EMA ribbons. We've got an M pattern breakdown, and now we're currently at the neckline again. So this could spell pretty ugly for waves in the short term. However, in the long term, it looks like momentum is going to come into favor of the bulls, but it might take a little while. So that's all I've got for waves. Keep your eyes on $20. I really don't want to see that breakdown. Once again, not financial advice. Cowboy out. Peace.